Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
This is the Doc and Eric Dubin with SD Weekly Metals and Markets Wrap. Joining us today is our good friend and silver expert, David Morgan of themorganreport.com. David, it's great to have you back with us.
Well, it's great to be back with you. Thank you.
Well, finally, we have you on the show when gold and silver have had some excitement to the upside over the last couple of months. It certainly has been nice to see gold and silver on most days getting some traction to the upside instead of being down seemingly incessantly for the past years, isn't it?
Oh, absolutely. And, I tried calling the bottom a few times. The last call, I think I got right, which was like the last day of November 2015. I said, that's it. And there are others out there saying that's not it. It's coming back. In the early issue of 2016, January, I said, we're going to get up, for certain, which you can't use in my industry, but almost for certain, you'll see a strong January. And I think it could carry all the way through April, which is what we had. And recently for our website members, I put out a video, and John and Eric, as you know, I do those on an as required basis. And, based on my experience, sentiment, everything I look at, I think we've probably peaked at $18 silver and $1,300 gold for a while, and certainly not for the year. And we are working our way down, but they're trading differently. Silver and gold are showing strength. You see continually increasing short positions from the commercials, and this is something that is new. I mean, basically, if you look at the commitment of traders reports from like 99, I think I looked at, till present time, it's a record high, which is interesting because if you go back to like the Paul Sarnoff days, back when the Hunt brothers were in the market, actually those volumes, which they are quite large, are not significantly large relative to how much silver was being traded back in what I call the good old days when I was your guys' age. But regardless, looking at that as well, that was an influence on me. So we'll see. Time will tell. I don't like short-term calls, but we've had such a run in the stocks in the Morgan Report, some up 200, 300, 400%, that especially with everybody that's waited so long or just become new members, I don't want to see them leave too much on the table. So, using what we say in How to Use the Morgan Report, has a 15% trailing stop on it. And if you get stopped out, the problem is if you stop out and you made 200%, wow, that's great. And it is. I mean, 200% gain on anything is great. But you don't want to, make 200%, only see it go to 2,000%. And that's tricky. And that's why I do these videos, because I have ways to mitigate that.
So essentially you're looking at a forward picture that kind of augurs for summer doldrums and then pick up later in the year at some point?
I do, barring, my caveat, which, Eric, I have to give you, and that's, who knows? I mean, there are too many black swans out there. There really are. And if I didn't say that on your program, I would really feel, horrible if something really happened, because I mean, there's so many fuses with a match an inch away all over the globe, not only in the financial markets, so, all these changes that are going on, and this judge ruling about the Obamacare, and, these people are out there in the streets not because they're happy or it's like the fun thing to do. Some of it's based on the food supply. I mean, look at Venezuela, and, it's melting down in front of our eyes. I have a bit of a pet peeve, when it's like, well, everything's fine. This normalcy bias is people that obviously aren't paying attention, or they're half asleep, because it's right in front of their faces. If they just take a few moments to really get some objective news, you've got to get off the mainstream media, or the lamestream press as it's referred to, and get on channels like yours so that you really get some information.
So what do you think as far as, forward supply for gold and silver? And we've had recent reports as far as, World Gold Council, I believe it was yesterday, talking about 21% increase in gold consumption over the first quarter, year over year. And silver companies have, in particular, been able to, the primary producers have been able to cut costs pretty well. And for a good chunk of time, petroleum's decline helped a lot as well. But copper is a mess. The base metals across the board are a mess. And, with 65-70% of silver coming as byproduct, that segment of the industry is still looking pretty precarious. I was wondering if you could share with our audience what you think as far as what the forward supply looks like and where things are.
Sure. A lot to swallow, to digest it. One, gold for first quarter of 2016 was the best quarter in 35 years. On the report you're referring to, if you studied it, and I'm sure you did, you guys are very astute, it was primarily paper gold. Not that there wasn't real gold involved, but it was primarily ETFs, or what I call holding companies, that were involved, which had such a great offtake in the gold market. On the silver side, I'll refer back to a free webinar that I did that's on our for our website members now. It's called "Is There a Silver Shortage?" And in that webinar, what I talked about was the year-over-year deficit that was in the silver market from 1999 to 2006 inclusive. So basically for 16 years continuously, there was a decrease in the above ground stockpile of silver because the overall demand was greater than the overall supply, regardless of what the demand was: investment demand, industrial demand, jewelry demand, whatever. And so we went from an above ground stockpile of 2 billion ounces in 1999 down to roughly 500 million ounces. So 1.5 billion ounces came out of the market in those 16 years. However, from 2006 to present day, there was such a boom starting roughly in 2000 for the industrial demand coming out of China for all commodities, and the commodity super cycle began, that, as you said, the base metals started to increase significantly, and there is a stockpile build even to this day. And so right now, we're basically back up to about 2 billion ounces in investment form of silver. I want to be careful here. We're not talking about any form of silver, jewelry or silverware or art objects or any of that stuff. We're talking about silver from commercial bars to silver rounds and everything in between that are investment, either retail, wholesale, or institutional. So when you look at the latest report out of the Silver Institute, and believe me, I'm quite friendly with them. I mean, I've known Mike Dorenzo for quite some time, and we've spent time together. They will tell you that there was a deficit in 2015 of, I think it was 120 or 129 million ounces. I just did an update on that. And that's true based on the way they account for it. And so I'm biased silver, all agree there was a deficit. And this is based on investment demand. But if you look at it the way that CPM Group does, and I'm not trying to defend either side here, I'm trying to be very objective, there is still a build in above ground silver stocks. So how do you look at it? Do you look at it, are above ground stocks dwindling or increasing? That's one way to look at it. I think that's the most objective way personally, but that's my opinion. And the other way to look at it is, was total supply able to fill total demand? And if you look at it on total demand, which means mine supply, recycling together, was that equal to all demand, which comes out of artwork, silverware, industrial demand, and investment demand? The answer is no. The demand was 129 million ounces more because of such substantial investment demand from the retail side, the coin side, that they didn't meet on an annual basis. So you can take it either way you want. I think that's bullish. I like it. I'd like it even more if we could say, hey, there's we're starting to eat at the above ground stockpiles. At this point, we're not. But carrying on, because you asked me about 3 questions in a row, we are seeing, and this has been my projection for a while, that I believe we are nearing the end game, which means we are going to see precious metals do well this year and much better in 2017 and really, really good 2018, perhaps 2019. So in other words, we're looking at the third leg up, which is going to be monumental in my view. But the overall commodity cycle probably won't go along for the ride, with the exception of oil, depending on what happens in the global economy, which means the copper, tin, lead, nickel, etc., zinc, even zinc were pretty favorable too. I don't see the base metals. I don't see the overall commodity cycle coming back. I think we're too far down in this contraction, and there's too many problems to see a rebirth of the super cycle in the commodities market. But since gold and silver are money, and that's the top tier of all commodities and the most cherished because you can trade them for anything that you need, want, or must have, that's a difference between them and commodities because they're money. They're not really commodities. At times, yeah, they act like commodities, but really they're money. So that's the way I see it, guys. I think we're going to continue to deteriorate over time on the overall global economy in a contracting, convoluted, more, excuse my slang, messed up way. And there'll be more and more pressure to things that are real, of substance, have value, and have continued to hold value, which means, food supplies, water, hard goods, and primarily precious metals on the financial side.
Yeah, that makes sense. It's almost like a reboot of the more stagflationary period of the 70s, 80s versus super cycle China coming and compressing 50 years of industrial revolution in 10 that we saw in the last decade, with that impact to all of the commodities and bankrupt governments left and right in the West, and financial repression and negative interest rates and on and on. They're all creating a kind of a situation for monetary inflation that'll be great for gold and silver, but not necessarily for all the commodities. So I was curious, we've frequently wondered, where is the extra silver coming from that's meeting this deficit? Do you have any speculation as far as where that most likely could be sourced from?
Boy, that's a great question, and honestly, I wish I had a great answer. Yes, absolutely. It's just, one little source is what I call burrow mining. Okay, what's burrow mining? Burrow mining is all over the world, but primarily in Mexico. That's why I use the term burrow. And these are small deposits that basically you go with a pick and shovel as a metaphor, but in some cases literally, and you go into these rich veins and you chop it out and you take it home, and there it is. So that does add to supply, but that's not that significant. I mean, it's just not. It can't. But that's part. I mean, so is that the answer? The answer is no. That is not the answer.
Do you think that a good chunk of that is flying under the radar of the CPM groups of the world, just because of the nature of that kind of mining?
Well, yes, I think it flies under everybody's radar. I mean, when I first, I've been at this for so long. I mean, the annual studies used to come from Handy and Hardman, if you guys even know who that is. But they were one of the big refiners way back, again, when I was your age. But CPM's been doing this study for years. In fact, CPM used to do the study for the Silver Institute, if you may not know that. But it could be, I mean, there's rumors, and none of them I've been able to verify, like, coin melt from different countries that have had it or stockpiled it. I mean, a lot of it makes sense because, basically the world was actually on a silver standard for quite some time. And then, you can do the research that I'll tip my hat to Charles Savoy, that's written for our website for so long, and now he has his own. But if you follow the money, and I mean silver in this case, and look at how dispersed it was with, during the Opium Wars at all, you'll see that, it's reasonable to think there is a lot of coin at one time, not any longer, that could be, smelted out and moved into bullion and kind of quiet. The other thing is, like, the recycling industry, pretty hard to get a handle on that. It's private. There's no public companies that I'm aware of in the recycling business. And so who knows how much, recycling is done where the owner of the entity might be pouring himself a queen-size bed in silver bullion, if you know what I mean. So, there are gaps, and yes, I've thought about it. And do I have an exact, John, Eric, it's right here, I can prove it, I know? No, I can't say that. What I can say is, yes, there is some under the radar. And as far as, where did it come from? I mean, from 1999 to 2006 inclusive, where did it come from? It came from the warehouses, basically. I mean, it came out of the stockpiles that were transparent to the public eye because we saw it. We got to witness it. We got to see what the stockpiles were on the COMEX, primarily, especially in those days, because we didn't really get all this ETF stuff and all that until later on in the cycle. And in my studied view, part of that was to obfuscate how dire the silver situation was for the bears and so awesome it was for the bulls, because you're looking at a commodity that's essential to modern life, and you're down to 500 million ounces. You're down to about, whatever that would be. Trying to think, do the math in my head, but just, a few months, 6 months or something above ground stockpile in a commodity that's money and has been, the word money and the word silver is synonymous in 52 countries on the planet still. Are you kidding me? And so if you come up with a lot of derivatives, what can you do? Well, you can take a lot of money that's going into quote unquote silver that may not quite reach the final definition or destination, if you know what I mean.
So, John, what's going on retail-wise? We're seeing a lot of people taking an interest in silver now that we've had a couple of corrections, and we keep going through this, 18 test down to 17. People responding as far as SD Bullion sales?
Yeah, demand continues to be strong. It was particularly strong that first smash towards 17, that first dollar correction from about the 18 level to the $17 level. But I mean, the U.S. Mint continues to sell every coin it can crank out on its allocation. I mean, we're 13 days into the month, and they've sold another 2.6 million Silver Eagles. They're up to just shy of 21 million coins on the year, and I mean, we're still in early May. So looks to me like we're still on pace for the upper 50 millions, which will be a new all-time record. And if you talk to all the authorized purchasers in the industry, they really don't see allocation stopping anytime soon. One interesting thing is, for as tight as the government coins, the Silver Eagles, Silver Maples, and even the government bars like the Royal Canadian Mint, 10-ounce, 100-ounce bars, those type of things, there's not currently really a shortage in a lot of the private mint rounds. So a lot of people in the industry have noted that that's rather strange. Usually kind of everything cascades off of Silver Eagles and Maples. Once those are tight, everything else kind of dries up. But there's a lot of rounds in the market right now. Can be pretty clearly seen from prices. I mean, it's been probably 5 or 6 weeks that we've been selling generic rounds at 49 cents over spot, any quantity. And really, the wholesale market still has quite a few generic rounds. It's probably the lowest premiums we've ever seen since SD Bullion has been in operation on generic rounds. And at the same time, the government coins are on allocation. They're tight, and investors are buying them up by the million every week.
Excuse me, I remember back in the summer we had a period where there were no 90% coins to be found anywhere, unless we were willing to pay $5 over spot or whatever, huge premiums. And then SD Bullion had a sale on 90% over the course of the last week or so. Is that indicative of the supply shifts as far as what's going on in the marketplace as opposed to the allocation at the mint? Has the higher prices in silver elicited a little bit more supply coming to the market?
Yeah, that's exactly it, Eric. 90%, a little bit different than the rounds. With silver jumping from the upper 13s, a little over $4 towards the $18 mark. A lot of 90% came back into the market when silver neared $18. So yeah, premiums have come down. They're still somewhat elevated. I mean, we ran a sale, I think, $2.29. The rest of the market is still, I think, in the low $3, selling at a retail level. I'm referring to for 90%. So it's still fairly elevated premium compared to a few years ago. If you remember when silver was on a tear and going through $30 through $40, everybody and their mother were searching through their closet, finding the bags, and maybe 90% could be had for around spot. And I was actually just talking to one of the two largest refiners / mints in the U.S., and head of their trade desk was telling me that back in those days, he can't even tell us how many ounces of 90% they melted down during that time. It was just so scarce. And right now, nobody would do that because it commands a nice premium to spot. So it's really indicative, that more than anything, as well as what the market's doing, is the supply is only from customers, investors, selling it back into the market. So if nobody's selling it back into the market, there's nothing anywhere.
If I might add on to that, John, if you go back into the history, and I'm gray-haired enough to do that, there was a bag market and a bullion market on the commodities exchange, on the COMEX, and there was arbitrage going on because a bag was worth 712 ounces melted down, and then of course the contract was for 5,000 ounces, and I forget if they had the mini contract or not, but you could arb back and forth. But I just want to add on that there's very few bags out there. Almost all of them have been melted down into bar form or rounds or whatever. In other words, they've been re-refined. So the bag market will, in my view, remain very, very tight and make these huge swings from buying them at melt or maybe even under melt at rare times, and then very extremely high premiums at other times. I mean, 1999, there were a 40% premium on junk bags, and I offed a few of them. I just couldn't resist that premium because I know the market, and a 40% premium on a bag of constitutional silver, referred to as junk, which I don't like the name, but junk bags.
Yeah.
And then, of course, you could buy them back later at, pretty much at melt. So that's one thing to bear in mind. The other,
and it really is a great way to arb the market, David. Like you said, those swings do happen just depending on the supply fundamentals, and it's similar to the silver gold ratio. I mean, you don't have to be out of physical and entirely into paper. You can arb premium swings on silver products, and you can arb what you believe is something overvalued of one metal versus another, silver versus gold.
Exactly. And I think I want to add on a little bit for my long-winded question with Eric. One thing I forgot to mention was that Societe Generale came out with some predictions about the silver market from the base metal side. And I think this is very important to silver investors. They were saying, and it agrees with my analysis, that there will be less and less base metal production, which means you're going to see a drop off in the amount of silver coming from base metals. I think that's pretty much a given. And there were rather significant numbers.
Investors don't realize that silver is primarily, that's the source it comes from, is a byproduct of base metals. It's not just the primary mines. They're a small fraction of the total overall mining output for silver.
Yes.
Kind of like a shock absorber, because people are so fearful of industrial demand going into the toilet when the economy, goes down. But that will, be somewhat of a cushion when it comes to the forward supply for silver. So I was curious in thinking back about bag market versus 90% versus other products. Do the changes in the premiums inform your sense as far as where the cycle is, as far as
Very, very good. Yeah, if you're, I've been a member of the Morgan Report. I mean, we don't do it often, but we do it often enough. I mean, we do it as required. The bag market is really a good signal. If you're looking at huge premiums in the bag market, you're almost always at a top. And if you're looking at buying bags at under melt value, which does happen rarely, you're almost always at a bottom. So even though it's become a very small market relative to what it used to be, it's a very good indicator still, and it's one that I use. In fact, if I could go on just a moment, if you go back in history and look at the Hunt brothers situation, there was a time that basically Hunt could have taken down the COMEX. This is something that's sort of, even to me, sort of kind of cheering for it, I'll be honest. So what happened was, most people that have studied it even at a cursory level know that he held both physical and a lot of futures contracts. But he was taking physical and he was taking it off the exchange. So it got to a point near the end where the COMEX could not meet his demand with physical silver bullion, i.e. 1,000-ounce bars. Couldn't meet the demand. His demand was greater than their supply. Default. However, the exchange went to him, and remember what I said a moment ago, there was both a bag market and a bar market, and there was a lot of bags in those days. So they called him and asked, well, we'll give you the silver, but we'll just give it to you in bag form. Is that okay? And Hunt, being the nice guy that I perceive him to be, said, oh, sure, no problem. Had he said, no way. The contract says 1,000-ounce bars. I demand 1,000-ounce bars. So it would have been interesting as a thought experiment to see what might have happened, but it didn't. He settled for bags, and the rest is history. As the price went to where it went, the rules went to where the rules went.
Yeah.
And I might add one more thing. When these markets get overheated, what you see is, margin requirements get increased. And when we saw that move, John, as you talked about, from, 30, 35 up to 48, I think they upped the margin requirements I think it was actually 5 times.
In like 10 days or something,
yeah,
too.
So, this is going to cool them off.
Times in 9 days.
I mean, this is something people have got to be aware of. I was really trying to do my absolute best to help people, as always, and told them, if you're buying silver at 35, please don't buy all, that you want, because, this market sooner or later is going to come down. And then it really held around the $30 level for a year after that peak. And I thought, maybe this market's going to hang at that level. But obviously it didn't. Once we broke 26, I was ahead of it slightly, and a lot of the big players that follow my work very closely, I put out another one of my videos and said, look, I'll just guarantee, I'll say it to you, we're going under 26. If you're in a big position, you might hedge. And of course, some of these guys love me to this day because I saved them from going out of business, basically, by hedging or selling short or doubling down negatively when it broke 26. And once we broke 26, we haven't seen that number for a very, very long time.
I'm interested to hear your thoughts, David. Are you referring to a lot of like local small dealers? And is in your experience, do they not hedge the market at all typically?
No, most do. I mean, almost all the guys at your level hedge and know how to do it, or they work through a wholesaler that hedges for them. In a lot of cases, no, I'm talking about guys that buy the SLV in size. I'm talking about like hedge fund managers that are working somewhere between, let's say, 200 million and $1 billion, although there aren't many billion-dollar funds that run in the metals, although there's some, and you can see them in the public domain. Those types that have big positions and want to know which way the market's going to go because they have a heck of a lot riding on it, not that the individual doesn't. And so those are the types that, watch these videos or subscribe or whatever. And I said, look, here we are, 26 is held 4 times. It's not going to. It's going to go through. It's going to go down, and who knows where the bottom is. And that was whenever that was. I mean, I did it right before it happened. And then I got a few emails thanking me for that call, because just like the call at 48 when I said get out, I mean, there's some people on the internet that are probably more popular than me, and that's fine. I'm not running a popularity contest here. I'm not trying to be everybody's friend. Believe me, being a silver bull, I'm a 1%er, but not the 1%er you're thinking about. But anyway, just not that popular, and just to call my own shots and tell it like it is. And some of these very popular websites had contacted me on the QT and said, David, you're going to lose your reputation. You're going to be out of business. You're going to look like a fool. You're going to, and telling me that my call at 48 was dead wrong. Silver is going to at least 100, and they felt sorry for me. Well, you know what? I got it right. And I'm not trying to pat myself on the back. Believe me, I've been in this market and humbled enough times. All I'm saying is I do my best. My top calls have been very, very good so far, and I really hope that they'll be really good. I'll be the most hated man on the planet in the silver community when I finally call a top in the silver market, which I think is probably about 3 years away from now. But I'll make, I'll call them as I see them, as I have my whole life, and I'll give the reasons why. And even silver can get overvalued. It just, what does overvalued mean in a world of the Beatles album Beatles song Helter Skelter? Because that might be a good analogy or a metaphor for what the world will look like when we see, $100, $200, $300. Who knows what the paper price will be silver.
Well, I know we got quite a few thousand readers and listeners who will be as excited as you and I are when if we see those prices in 3 years. Certainly would be nice. Well, guys, David wanted to do a short show this week, and like we joked about before we went live, we have about doubled that. So Anything else? Anything else you want to convey to the listeners, David, before we wrap it up?
Yes, they just go over to the new website, themorganreport.com, and give me their first name and an email. I'll send them the Riches and Resources report. A lot of good information in there. Some films to watch over the weekend, some ways to learn more about these markets. And once you're on that list, when we do these webinars for free and for fun, like the Is There a Silver Shortage webinar, you'll be informed because you'll be on our free email list, and we'll just let you know. And basically we do those and we record them. It's sign up and get it for free, and then after that we put it on for our website members only. But you certainly have the opportunity to get to interface with either me or the guest or both during the interview. So it's something that really seemed to be, I was actually surprised. We got so many signups, and I only actually advertised it for like a week or 10 days. It was a very short time frame, and just massive amount of people came in, and way too many questions to do it in the hour time frame that we had allotted for it. But we did get through 50-60% of the questions. So I like that. I'd love to educate, and people would ask me to do a Mike Maloney type thing. I don't have the budget that Mike has. Mike has done some awesome work educating people, and he and I are pretty close friends. But, webinar is more, let's say, personal. I mean, you can be on the call and you can ask your questions direct. So we're going to continue to do those throughout the year.
And it's great to hear that a lot more people are checking them out, too. It's probably something to be said about the new bull market phase that we're in.
Agreed. Agree with you.
All right. David Morgan of the MorganReport.com. Always great to have you back in the show with us, David.
Great. Thank you, guys. Appreciate the time.
All right. For the doc, Eric Dubin, and David Morgan, thanks for tuning into this week's SD Weekly Metals and Markets.